And welcome to Invest IQ. In this video, I want to speak about the different brokers out there for dividend investing. There's a lot of different ones out there that differ in their margin rates, their maintenance margins, so I kind of wanted to touch on that initially, and we'll talk about more in other videos. But with this video, I want to speak about a couple of different brokers that come to mind for me. That'll be Schwab, Robinhood, Interactive Brokers, and Fidelity. So ideally, what we're going to be talking about is the margin interest, the maintenance margin, the real-time versus end-of-day values for margin, or I guess buying power. And the key, I guess, for what we're talking about as it relates to margin is your available for withdrawal. So that's really related to your maintenance margin, essentially, because it differs among other brokers. So as you can see in this first tab, this is Charles Schwab. And they're saying here, if your debit balance is between $0 and $25,000 or $24,999, your effective rate is 12.5%. So they're saying if you have a debt balance, or right here, your rate of interest is 12.575%. So if we're going to do this calculation here, and you had it for the whole year, let's just assume you have $15,000 of margin debt. So 15,000, and let's see, the effective rate is 12.5%, which would be, let's see here. So 0.125. Your total margin interest would be $18.75 per year. If we divide that by 12 months for the whole year, you'll be paying $156 a month in margin interest if you don't pay the loan down. Some people are okay with that figure, other people are not, so it just depends on what you're comfortable with. So let's use the same value with Robinhood. So remember, we were at 12.5%. Robinhood up to $50,000 is 5.75%. So let's do that calculation. So $15,000. And their rate is 5.75%. So times 0.05, check it again, 75%, 75. So you can already see that the margin interest is 862.5 for the year. So let's do that divided by 12 for the whole year. You're paying $71 a month in margin interest. So you can see that vast dramatic change between $150 plus with Charles Schwab compared to Robinhood. And now let's try Interactive Brokers. So their rate for the same amount, less than $100,000 for IBKR Pro, is 5.83%. So let's do that now. So let's see, 15,000 times, what was it again? 5.83%, 0.0583. So 874.5 for the year. And what is it divided by 12? $72 a month. So rounded off to $73 a month is your margin interest for Interactive Brokers. And obviously it depends on what your balance is. So I guess the higher your debt balance or the higher the value of your account, your lower the interest you would have. And lastly is Fidelity. So they're different as well. So you can see they're 12.575, which is pretty much the same as Charles Schwab. So that's the differences here on the margin interest. So you really want to figure out what interest rate payment are you comfortable with. Obviously, you want to have less going out in margin debt as a payment than you'd want to, because you don't want to basically give away money that is available to you. So the next topic I want to talk about is the maintenance margin. So that basically means that we're speaking about individual values for stocks. So let's say for this example that we're talking about YieldMax, and you can see here we just talked about this in the last video. So obviously they're a weekly paying ETF that pays out these dividends every week. And I know, being at Interactive Brokers, that their maintenance margin is 25%. So if we're to do a calculation here, if I purchased $80,000 worth of YieldMax and my initial margin is 50% because that's usually the standard for every broker, and my maintenance margin, like I mentioned, is 25%, then what that's basically saying is my margin call price that I would be in trouble with basically is $53,000. So between $80,000 and $53,000, I have that cushion space of room to take out as equity. So I can easily take out $10,000, $15,000, $20,000 and still have room to operate in the account. So that is with 25% margin. Now I know for a fact that Charles Schwab, their margin rates are much higher, or the margin maintenance rates are much higher. So I believe for YieldMax, for the same ticker with Charles Schwab, is 50% maintenance. So let's do that. So same amount, initial purchase price $80,000, initial margin 50%, and their maintenance margin is 50%, much higher. So you can see I can't even do it. So let's just put 49% just for the sake of example. So it's much harder to take out equity, you see. So it's saying I have $80,000 in purchase price and it's so close to what I purchased it for, I can barely take out anything. So again, the key here is low maintenance margin, low interest rate, because you want to use as much equity as you can to your advantage. So that's basically the example that I want to speak about, where your broker has the best tools for you to use. So it depends on what you want to do and how you want to use your account. But I'm just saying for this example, you want to figure out who has the lowest rate, who has the lowest maintenance margin, and it depends on the broker of whatever their maintenance is. So like I said earlier, Charles Schwab is different from Robinhood. Robinhood is different from Interactive Brokers. So everything differs. Everything is different. You have to use what strategy works for you or what makes the most sense to you. If you want to live out of your account, that's fine. But again, use these tools to your advantage and figure out what broker works for you, what you want to do. So I think that's going to be it for me. If you have any questions, let me know in the comments. And anything else, please let me know. Thank you.